world oil demand is scaling record highs. To me, that feels like it's a bit at odds with the mood and the sentiment on the ground. We hear so much about the faltering Chinese recovery, the fact that there are a lot of macro headwinds, and then in this report, you're saying world oil demand is actually at record highs.
Yes, good morning. No, it's true. We hear a lot of concerns about the macroeconomic climate, but oil demand has been recovering very strongly this year. In June, we had oil demand at an all-time high, 103 million barrels. And we're expecting further gains through August and towards the end of the year. China is driving the growth this year in global oil demand, 1.6 million barrels a day of growth from China alone, out of so more than 70% of the total. And we're seeing recovery in air traffic. It was expected, but and growth is slowing, of course, next year as inflation, higher interest rates are feeding into the real economy. So we're expecting only 1 million barrels a day of growth in 2024.
Toril, I want to unpack the China numbers a little bit more because reading through your report, China oil demand has remained very resilient. You cite that. The level was 270,000 barrels per day ahead of your last forecast, and you've even upgraded your expectations for 2023 growth to 1.6 million barrels per day. So the indicators and the numbers and the demand coming out of China is still pretty strong.
Very strong indeed. All year, since the reopening of China at the start of the year, Chinese oil demand has surprised to the upside. We have increased the forecast almost monthly. And we're seeing now the latest numbers with very strong growth from the petrochemical sector. So this is a bit unexpected. And we're seeing Chinese petrochemical demand growing by almost 1 million barrels a day this year. But this is coming at the expense of lower operating rates as producers outside in the Middle East, in Europe. And we're seeing petrochemical industry under pressure from increased throughputs in China.
Talk to me about what you're seeing in Russian shipments. You have held the forecast steady, the output that's coming through from Russia steady, though it is, of course, at the highest level since the war began. What else are you seeing on the ground there?
We're seeing Russian oil exports in July were 7.3 million barrels, which was steady from June. It is down from the pre-war levels. And Russia has said it will cut exports in August by 500,000 barrels a day and by 300,000 barrels a day in September. We are now seeing exports falling off to some extent. That this is due, as you may have seen, that Russian oil prices are now above the price cap set by the G7 coalition, which means that EU maritime services cannot be used to transport Russian oil to other buyers. So this is tightening up the tanker markets somewhat. We're also seeing the drone strikes on infrastructure in the Black Sea last week, increasing the war risk premium on exports. So we're expecting some declines in Russian exports in August and also in September. But going forward, we'll have to see how Russia is able to find buyers for its oil.